Well, there we have it. The 2025-26 budget, national budget, has been tabled. I'm Zinati Guma. Welcome to Business Day TV's post-budget analysis of Finance Minister Enoch Godongwana's outline of how the fiscal purse strings will be maneuvered to keep the economy intact. And joining me with their assessment of what has been tabled in studio, Kandibai economist at PwC, Zandile Makoba economist, and a lead specialist for research and insights at Liberty, and via Zoom, Martin Ackerman, chief economist at Citadel. Thank you so much for your time, gents and lady. We almost didn't have this budget table because of Kaizer Chiefs. I hope that the Kaizer Chiefs fans will not be offended by that. Very offensive. So we are glad that it finally was tabled after quite a few weeks of the markets, economists, everybody being on tenterhooks. Zandile, I want to start off with you. Just characterize this budget for us.
Well thought through. I think there's been a lot of compromise and conversation, especially after round one, as they called it.
Yes.
What I drew from the speech is that there is consideration at all levels of society, from working class, middle class, aside maybe from the personal income tax non-adjustments. I'm picking up thought around how life can be better at different levels.
Yes.
And a lot of the infrastructure programs speak to some of the burning issues on the ground for households. So that is good. There's always drawbacks. There are some things that were not touched on. In previous speeches, we got a little bit of a review around the grey listing, which wasn't mentioned much this time.
Yes.
And we know that with a lot of expenditure pressures mentioned, one that is coming out of the US is this idea that we're having that loss of funding from the US on certain pillars. Not really mentioned there, but if you look into the details of the budget, it seems that there's a little bit more on healthcare than would ordinarily be the case, which is quite good. But yeah, nicely mixed. I think we have navigated a difficult period, and yeah, they've come to a solid way forward.
Kati, would you say that just in general for South Africa, as we have with a lot of things, that there are maybe low expectations, particularly for the effectiveness of the budget? And actually, how would you kind of narrate that, looking at the budget that was tabled here?
Well, I think that's, you listen to a lot of people and a lot of suggestions about what we should be doing, and everybody talks about certainly effectiveness.
Yes.
And it's certainly one of the areas where I think the budget is probably most misunderstood, because the only thing about the Minister of Finance is really to divide the revenue that he gets.
Yes.
And whether it's spent effectively is somebody else's. And so one of the things we've known, for example, is that part of the work that they've done over a period of time around this effectiveness is some of these procurement rules and making sure that we've got the controls and all of that. But unfortunately, those fall down not so much at that department. They usually fall down at expenditure level, and certainly, as we've heard many, many times from the Auditor General, right exactly at at the accounting levels where the money is actually being spent. And so that's really the difficulty that we face. But I think at the same time, because I think people expect so much, I suspect also the Treasury feels that they have to deliver as much. And one area for me that's still clear is the idea that they can make promises, for example, that is still concerning. We said this last year at PwC, and we're probably again, we're at the same place around that high expectation to deliver higher growth. At 1.8%, that 1.9%.
1.8%, on average.
1.9 for
1.9 for this year. It's an extraordinarily high number, not because it's high itself, but if we move from 0.6 from last year, and that's 3 times the growth rate we had last year, one has to wonder really about our ability to actually move there. I know, for example, we are on 1.5. I think I saw the IMF around that same number, because to push it that far, given some of the challenges, Zanele, we were out outside, and she said, we haven't said anything about Trump. And we know that that's
of course,
something that's going to be of impact this year
to
all of us. So I think those high expectations that they feel, we have to deliver on these expectations. And I think people are going to start to see that, we did this last year, we are doing it again, and we know the results.
Yeah. All right. Martin, just from your side, did this budget exceed, fall short of your expectations or meet your expectations?
Well, I think, we've got the budget that was never presented, setting our expectations. And to be honest, this speech, 90% is exactly what was presented in that speech earlier in Feb, except for the VAT number, that's quite slightly different.
Yes.
So no, I think, we knew that they are going to present something around tax changes. But in terms of what they need to do in terms of getting the economy going, the expenses that's baked into the cake, this budget, exactly in line with what was expected in February. It was fine-tuning the revenue side and where they can take that from. We've got one of the most transparent budget processes in the world, which is a good thing because, I think that was part of the unhappiness when the speech was cancelled in February, that the world and the market said, but we typically know exactly what we're dealing with. So getting back into that room today and hearing the budget with those small changes, I think that should bring confidence and stability in terms of the process going forward.
Well, let us talk about the contentious issue here, and that was VAT. So they've decided to increase by 0.5% for 2025, and then the next year, 0.5%. I'll go into the details later in terms of them saying that they will assess, depending on spending, if they should increase it by another 0.5% in the next year. Zandile, I was actually looking at the markets, and of course, I would have imagined that should VAT have been increased by that 2%, the markets, particularly the rand, would be in a tailspin right now. But seeming that it is quite stable, so would you say that, this is an evil that we can live with in South Africa?
It looks like it's going to have to be one for now. It's a marginal increase compared to what we had initially seen with that significant increase. So I think it will be accepted to some degree. It is punishing to lower income groups, which is obviously something that we don't welcome. But in the greater scheme of things, I think the expenditure elements are quite positive for things like job creation, which also then create a little bit more room for more economic opportunity and opportunities for people to then be able to fund a more inflationary outlook, which is what the higher VAT rate would imply.
Yeah. Kandi, what was interesting is that in Edward Kiesweter's comments that he made at an Alan Gray event, of course, that was hosted by our previous Business Day TV anchor, Alicia Sekum. He said that the last time VAT was increased by 1%, they really didn't collect a lot of revenue. So I'm just thinking at this point, because it does still punish the poor, even that 0.5% increase. But then if the 1% didn't collect enough revenue, what's the 0.5% going to do?
It's an interesting question because, again, you have to sort of look at the numbers. And I was just taking a look at, for example, what we think is going to be household consumption. So for 2029, we think we are hoping for 2025, for 1.9%. In the previous budget, when the rate was lower, it was 1.3% that we expected. So certainly we are looking at we are making a leap. Now there is thinking here that this year we'll have hopefully lower inflation because inflation has come down, and then maybe a little bit more in terms of consumer or at least household incomes coming up in terms of at least our wages, we hope.
Yes.
So that there's some bracket or some space that's open for people then to take on this extra VAT. And that's really the only way we can do this, is that we have to believe that household consumption is actually going to increase, that there is that space that's coming to be able to meet that. Because if it's not the case, then we are basically back where we were, because that was really the shortage that we had. So again, these numbers are important to consider given the kind of environment that we're in. and the kind of promise that it seems that the minister is hoping for. But one thinks realistically, this, I mean, I guess it's also marginal, but I guess at the same time you can see that in the numbers, that, you know, they've had to cook them in such a manner that they can be palatable. I think that's the word. I mean, excuse the pun, but I think, you know, can we really swallow this cookie? And I think many people seem to be happy about that. But really the credibility, but really clearly, one of the key things we have to, and I think the minister highlights it when you are speaking, is that we are not shielded yet from further downgrades.
Yes.
So it's going to be interesting to see how, for example, ratings agencies take this, how markets and certainly the investment community thinks in terms of the credibility of this budget.
All right, let us move on to the other aspects of the budget, taking a look at one important pillar, and that is, of course, our debt picture. Martin, expecting it to stabilize. Where are my numbers? 76.2. Of GDP. What do you think of that level, Martin?
Yeah, so I think the concern here is that, you know, every budget for the last 5 years, the debt to GDP number increased a little bit higher from where we are at that point in time. And then the minister argues that, you know, it will stabilize there and we'll start seeing a decline. And we've been riding that debt wave, if you like, now for the last 5 years, and it's still getting higher and higher and higher. And that obviously speaks to the fact that the economy is not growing. So lack of growth means that, you know, if we don't get the tax revenue, we need to actually cover that by increasing the debt. So the number today, you need to question that because that's, again, as a function of the growth that we spoke about earlier on. The potential tax revenue that we get from these changes that they are making. But I guess the concern remains probably not the debt, but the ability to get this economy growing. So, you know, we alluded to the fact that 1.9 for next year or for this year is actually quite steep. If you look at the full budget document, they've painted a couple of scenarios. And one of the scenarios, if you read through that, let's just call that is the Trump scenario. You know, that plays out our growth is much lower than what they assume in the baseline. And then with the debt that's in the pipeline, you know, that number quickly goes above 80. And that will be very negative for our rating agencies. So, yeah, to answer you, I think that number, it's great for the budget to show that it's going to top out and decline. But the proof will be in the pudding, and if we take history as any guide, it haven't happened over the last 3 years. So that should remain a concern for most investors, especially the bond investors.
Kanti, you mentioned ratings agencies earlier on. What do you think is going through their minds right now?
Look, I think one of the key things they've always said that we are not able to really meet the credibility and the belief of what we are trying to say. I mean, we just from what Martin is saying, if you look at the numbers that we promised last year and where we've ended up slightly higher. Well, slightly higher. So we would have said last year we're going to get to this year at 3.7% of GDP for the deficit. We are now at 4.6%. You know, so that's a big gap from what we had promised. Even though we've actually shown a higher growth forecast from what we would have achieved last year. So that really tells us that we are under a lot of pressure, and whether or not they're going to look at that and say, especially those who have taken a sort of a positive outlook, a stable outlook, are we still stable, and are we at the place where we can get that? And I think that's the basic thing that they're going to look at, because there have been those concerns. Again, in a world in which, for example, we're starting to see trade wars. Yes. In a world that we have some, tensions with bigger, with the US, which is a big, obviously, destination for us, and then of course the risk that we are seeing globally. So those things suggest that, and I think the governor of the Reserve Bank said this when he spoke the last time on his MPC comments, that there are so many risks that it is really one gets to be worried about any forecast that we are making.
Yeah.
And the focus for growth is probably one such forecast that has really serious downside risks for us. And so that is something that I think ratings agencies will, because as we look at this data, and again, Martin says that we are always pushing it up on the basis that we are actually going to be able to raise that money. So I'm very interested to hear how they will characterize this budget in this environment, in that context.
What have we failed on here, Zandile, in terms of that debt picture? Do we just keep on doing the same things without really changing anything?
You could say that. I mean, one of the big things is, for example, the wage bill, which is constantly being renegotiated at critical points in time.
And ending up higher than expected.
Ending up higher than expected. So really starting to focus on the expenditure side and seeing how we can mitigate unnecessary expenditure is a critical one. For me, debt is not a big issue if it's moving in the right direction, if it's moving towards infrastructure and ensuring that we are stimulating economic growth. So lots of talk about that. I think it's one of the, it's how he premised the speech, you know, kind of starting with this idea of we're going to create growth, and growth is going to come through investment and expenditure. So if that happens, then we might, you know, avoid this constant upshift in that debt to GDP. The other positive here, I think, is the big focus on the public-private partnerships.
Yes.
And if that creates the kind of trust between internal bodies in our economic system, hopefully it insulates us to some degree in terms of what is happening in the external environment.
Yeah. Martin, would you say that we don't have an expenditure problem, but we have an inefficiency problem?
I think it's almost a bit of both. There's definitely an inefficiency problem when you think about a lot of the plans that's been on the table for the last 4 or 5 years. I always say that, you know, we've got the right economic policy, 90% at least. It is about efficient implementation. The money is actually there. You know, that's what the budget is about, dishing out that for the different projects. But we don't see the results, and the results take so long before you see anything. So that's probably an efficiency problem. But then there's also excess spending that one can start cutting back. And I know everyone's always talking about this, the wage bill. That is one, but you know, the fact that we also give inflation or higher than inflation increases there, you know, you bake that into the cake forever. It's not just this year. You lift that base for the next 10, 20 years. And, you know, it's very unlikely that you're going to see a point where you actually cut salaries. So that's lifting expenses for the future and the long future. So yeah, I think it's a combination of both. It's having the money in the right place, but they're not getting the results on the efficiency side. And then it's also spending too much in other areas where we could probably get away with some cutback in expenses.
Martin says we are spending too much in other areas.
I thought was interesting actually on this effectiveness and efficiency, whichever way you put it. The minister speaks about what he calls accruals. And he says these accruals are 22 billion, which was interesting in the sense that he says there are some provinces in particular and departments where basically they spend the money, they say they overspend, so that actually the new money that's coming in, plan for whatever the budget is for next year, is to pay off things they've already actually, you know, contracted for. So that actually you are now at a place where perhaps that money is not going to where they said it was going, because one imagines if you budget and say next year, please give me 50 billion, I'm going to do this and this and this, but the first 22 billion has to pay for services you already actually encountered, and therefore you're only left with a little bit more. So I suspect that's also another thing that's probably of but I didn't understand quite well, but it does seem that people are spending and then waiting for next year's money. And then when next year's money comes in, they're paying for last year's goods. And that's an interesting thing about whether or not that helps actually move us forward.
Well, I mean, just on that, because, I mean, he did say that he will assess if he should implement the other 0.5 percentage point VAT increase if spending does reduce? Do you think that this is a position we could get to?
No, I mean, it's not one that we'll get to. The only way, though, you can is because obviously one of the things that happens with us is that whole capacity of the state, and that we don't get to actually spend the money because we don't know how to, especially on the infrastructure projects. So if we don't get to that, then he takes back the money and he says, look, I gave you the money last year, we're not giving back to you again for the following year. And then maybe he does not have then to increase that because the money has not been given. But that's also interesting given that that is also the year of elections in local governments. I'm not sure.
As we're talking about spending, you made a very interesting point earlier, Zandile, that there's more spending on healthcare. Where you said that he's not really mentioning, Trump and the kind of gap that's going to be left by the pullback of funding. I'm also wondering if maybe that's not laying the foundation for NHI and just, the general infrastructure and ecosystem of that.
Definitely. So I think the NHI conversation has been one that's been going on for a couple of years. Lots of talk now around the implementation mechanism and how that might play out. So we'll see how the expenditure element on there happens. But also the experience of our government is that when things become imminent, we need to make those shifts. And we are going to face the challenge of a increased burden on healthcare because of some of the changes we're seeing from the Trump administration. So it cannot be ignored. And if some of that budget needs to be repurposed, I think that will be a move that the minister makes.
All right. Well, we have about 1.5 minutes left, so I'm going to give each of you 30 seconds to rate the budget and a quick explanation of why. So, Martin, just starting off with you, how you rate the budget and why?
Yeah, I would say, it's
between 1 and 10.
8 out of.
Yes.
So yeah, 8 out of 10.
Okay.
I would say, there's obviously, the challenge is significant, and it all boils down to economic growth. And I think what the minister is trying to do is to say, well, the 0.5% increase in VAT is almost an effort from everyone in the country to say we're buying time for the reform to kick in so that we can create more jobs so that the economy can get going. So I would say, given the current environment, probably the best we can do. And to get to that 10 out of 10, that is really making sure that we implement the reforms and build on some of the successes that they alluded to in the speech already from the first round, so that we can get economic growth to 3.5–4%, because that's a silver bullet that will resolve all the issues that we are facing.
Yeah, all right. Thandi, your rating?
I'd give it a 6. I think while there's a lot of good work that's gone into it, I think we are really missing that credibility part. I think that's a serious part where actually can we believe this budget?
Okay, all right. Zandile, your rating?
I'm more optimistic. I'd like to give the budget a 8. I like the premise of focusing on growth. And I think there is a seriousness given Operation Vulindlela and all the accolades that were mentioned in today's speech. And I think with deliberate focus on those kind of changes, we will see increments in employment. We will see GDP do better than my colleague here. So yeah, I'm gonna give it a hopeful 8.
Okay, at least we got a pass. Okay, a win is a win. A win is a win. Thank you so much for your time, lady and gents. Really appreciate your analysis today. My guest, Thandi Bai, economist at PwC, Zandile Makhoba, economist and lead specialist for research and insights at Liberty, and Martin Ackerman, chief economist at Citadel. On the other side of this, how has the budget been received by business? Business Unity SA CEO Kulegani Mate and Business Leadership SA CEO Musi Mavuso weigh in right after this.